with the always looming threat that Social Security may not be there by the time we retire. Most people worry about how they will replace their income when they stop working. As a better wealth builder, we take control of our future and plan for our retirement with financial wisdom. There are many ways to replace your income through investments. Today, we are going to talk about retiring with the growth of dividend stocks. Make sure to watch till the end of the video because we will be talking about how to retire early as well, potentially even in 10 years or less. Don't forget to subscribe to this channel so we can help you with your wealth creation journey. Let's get right into the video. What are dividend stocks? These are investments into companies that pay their investors throughout the year from their earnings. Most commonly, they pay every quarter. Depending on the sector and how long a company has been in business, dividends can range from 2% to 7% or more. Our favorite kind of dividend stocks are from dividend aristocrats. To be considered a dividend aristocrat, a company must be in the S&P 500, have been increasing its dividends for at least 25 years, and meet certain size and liquidity requirements. To maintain this standing, a company has to be profitable and continue to grow in order to pay these ever-increasing dividends. And with the minimum of 25-year requirement, a company has to be able to weather through many economic downturns and still continue to pay out to their shareholders. This shows their stability and is one of the reasons why they are our favorite kind of dividend stocks. As dividend increases over time, passive income to shareholders also increase, and allows them to keep pace with, and even exceed, the inflation rate. This means that you can live off the passive income from these companies year after year. With a well-balanced portfolio, it is possible to average at least 5% dividend payout from your investments. That means with $1 million in this portfolio, it would pay $50,000 a year in dividends, just a little below the median U.S. household income of $70,000 in 2021. Before you say, "But I don't have $1 million to invest," turn off the video, unlike, and unsubscribe. Know that you don't need to invest a lump sum to benefit from dividend stocks. Most people don't have $1 million sitting around. The way we can take advantage of this type of income generation is to consistently invest week after week and month after month. The traditional proverb, "A penny saved is a penny earned," is really true. By saving and investing $1,000 a month, over time you will have enough money invested to earn you $1,000 a month instead. Okay, you're probably thinking, how does this work? How does saving $1,000 turn into making $1,000? More than likely, you've heard about compounding interest. If you're carrying a credit card balance, you've already felt the effects of it. Often when people are only paying the minimum, their balance keeps going up. This is because the interest charged is growing at a greater rate than the amount paid, so the amount owed compounds on itself. At Better Wealth Builder, we don't recommend carrying a balance on any of your credit cards, but this shows how a balance can snowball. Dividend investing causes your balance to compound in the same way, but this is money that is yours, not money that you owe somebody else. When you are growing your principal by investing every month, you still get paid dividends from these companies. If you reinvest the dividends, you will see exponential growth of your investment over time. How do we know how much money we need to invest to be able to replace our paycheck and live off the dividends passively? This is where our high school math comes in handy. We start with the amount that we need to live off of and divide it by the percentage yield of our dividend portfolio. This will give us the final principal amount we need. This becomes our goal. Let's go through an example. We'll use $70,000, the median income, as the amount you need in retirement and a portfolio that produces 5% dividend annually. $70,000 divided by 5% means you will need a portfolio of $1,400,000. If you look at this equation in reverse, $1,400,000 at 5% will produce $70,000 a year, which you can take out and use for your expenses, and your portfolio will still produce $70,000 the next year. The million-dollar question is, how much do you need to invest each month to reach $1,400,000? This math equation is a little more complicated, but luckily, there are plenty of calculators online that we can use. Just search for compound interest calculator. Using the one on investor.gov, we see that if you start saving around $1,000 a month from the age of 25, you will have accumulated over $1.4 million by 65 years old. At 5% yield, you can retire with an annual dividend income of over $70,000. This doesn't even take into account the fact that the value of your stocks will increase with the value of the market. 40 years is a long time, and if you are starting later in life or if you want to retire earlier, then you will have to increase the amount invested per month. Say you want to retire in 25 years, you will need to save and invest around $2,500 a month. It may seem intimidating since it is almost half your monthly income, but it can be done. Take Eamon and Christina from our rich journey. They are a family of 4 and had government jobs. Through a lot of saving, investing, and side hustles, they were able to become financially independent and retire early at the age of 39 and 41 after only 8 years of saving. If this information has been valuable to you, make sure to hit the like and subscribe button. This will let us know that we should create more videos like this one. Eamon and Christina are not the only people that were able to retire early and live on dividends. Others, like Mr. Money Mustache and the Mad Fientist, have also retired in the 30s and can just live off dividends. But how do we achieve a high savings rate and be able to invest into the stock market every month? The biggest habit you have to acquire is really simple. You have to live below your means. You have to spend less money than what you make every month. Think of it this way: if you're trying to fill up a glass with water and halfway up that glass, there's a big gaping hole on the side, you're not going to be able to fill up that glass. You have to make that hole smaller if you want to fill the glass to the brim. It's the same thing with saving. If you're spending money left and right, always going out to dinner, paying for cable with all the premium channels, while only watching Netflix, or you're always upgrading your car, or buy a bigger house, you will need more and more money just to keep up with that lifestyle. Instead, try going out once in a while. Not only will you save money, the experience will become more enjoyable as well. Really think about which of your expenses are necessary and which are just something you want. Decrease the size of that money hole and you will have enough to save and invest into your dividend stock account. The other way to fill that holy glass is to pour water in at a faster rate. In terms of income and expense, this means finding ways to increase your monthly income. Besides working some side hustles for extra money, the easiest way to earn extra income is house hacking. Housing cost is the highest expense that we have every single month. If you were able to eliminate that, it would mean an extra $500 to $1,000, and for some people an extra $2,000 every month. This is easily accomplished by having a roommate or maybe renting out one of your rooms. For more privacy and to have your own space, think about buying a duplex or triplex and renting out the extra units. This will cover your rent or mortgage and maybe even more. Take that money and put it into your dividend portfolio to help it grow faster. To get started, check out the link below to Robinhood. If you open an account with Robinhood and link your bank account, they will give you one free stock worth up to $200. Now, continue your research on dividend stocks, find some companies or high-yield index funds to follow, and take action to secure your retirement. Make sure to subscribe and turn on notifications so you don't miss out on great videos about dividend stocks and much more. Check out this popular video on wealth building and I'll see you in the next video.